Morning, everyone. Today is the 15th of May. Welcome to another weekly market analysis. My name is Pedro. I'm the senior market analyst at the Alphachain. And there you go. In this session, we are going to pay attention to what happened last week and what we can expect for the week ahead, and maybe some trading opportunities within the different assets that we cover, from the FX, indices, crypto, and commodities. It's been a while since we last spoke. There's been bank holidays the last couple of weeks. Since then, we had the FOMC, ECB, and BOE meeting, all of them hiking another 25 basis points. Now, they are in different cycles. Most likely, everyone is pressing in at this point that the Fed has peaked. With the last interest rate at this point being at 5.25%, the interest rate. ECB, another 25 basis points to 3.75. In the ECB is still expectation is to have at least maybe 2 more hikes into the next 2 meetings all the way through the summer, and then we'll see what may happen. And in the Bank of England, which was last Thursday, we had another 25 basis points from 4.25 to 4.5% at this point. And based on the commentary as well, there's a belief that there's going to be more hikes in the future. But of course, all of them always focused on or being data dependent, paying attention to what's going to be the new inflation data coming out, the next labor data also being announced, and so on, right? So always data dependent to see what may change in the near future. So this is where we are since we last spoke, and has been a little bit of the big impact that has maybe affected the market into what we have seen, especially last week, finally, with a move upwards on the dollar, a move to the downside on the euro, a move to the downside on the pound. Within this is a little bit indecisive, right? Meanwhile, we had all the earnings seasons, which basically had finished already. Last week, we had already the new CPI data coming out. It was 0.4% at this point, being 4.9% year over year. It has been the first time since the last 2 years that we had inflation below 5%. Last time it was, if not mistaken, in May 2021, right? So basically 2 years ago since last time we had inflation or CPI data below 5%. The core CPI is a little bit more in concern. An increase of 0.4% on a monthly basis, I think at this point is at 5.5%. So this is where we are in the US. Now, regarding the US and the Fed and the interest rates, yes, basically the market, as you can see in here, is this one shows the probability or the odds that we are going to have another hike, or maybe where it's going to be the interest rate in the next meeting, which is going to be on the 14th of June 2023. And as you can see, the market is pricing in a rate unchanged, right? So to stay at the same at where we are at this point at 5.25. with only around 15% of a possibility of another hike. Now, these numbers, of course, they can change. It depends, of course, on any data point that's going to come out, or any big change that no one is expecting that can influence this, the odds of this data to change. But at this point, the peak most likely is in, and I think there's a little bit of an agreement with that. Now, the biggest disagreement that can be between what the market is pricing in and what the Fed may do is regarding the cut reduction, right? At this point, the market is starting to predict somewhere either in the next meeting or not the next, like in the 26th of July or in September, to start to see some rate cuts. As you can see at this point on the 20th of September, there is a high probability of a rate cut from 5.25 to 5% in here, being then, for example, by the end of the year, to be at 4.5%. That will be basically minus 75 basis points than what we are right now, and that's basically 3 rate cuts, maybe in September, November, and December. And this is maybe the biggest difference, because the Fed may not do exactly that, right? There's a question mark if there's going to be even any rate cuts this year. The Fed hasn't really mentioned that, so that's going to be maybe the biggest difference or shock of reality between what the market is pricing in and what the Fed may do. Now, there's maybe some probability that by the in the last quarter there's maybe one rate cut, but not 3, right? Maybe at around 5% to be by the end of the year, but not exactly to expect all these 3 in here. At the same time, we are having at least the last non-farm payroll, which was actually after the FOMC meeting, it came out even stronger than expected. That has been something that has happened all the way since almost 1 year ago. The expected, like the prediction of the NFP, the real results, it's always beaten the expectations in a positive way. And as you know, the FOMC, the Fed, the Chair Powell is looking to bring the unemployment numbers to the upside, to increase unemployment. That's kind of a little bit a way to control the demand side of it in order to continue to push the inflation down. But he hasn't really seen that data showing up in the non-farm payrolls numbers. Now, something that we have seen regarding the labor market is paying attention to unemployment claims. And this can be one of the first clues that you can see in order to eventually expect the unemployment to start to increase. Because as you know, basically, if you look at the data and looking at the numbers that were coming out, and basically in March, we are basically underneath the 200K mark in terms of unemployment claims. In April, we started to jump towards 220, between 245 and 220. And now in May, we had another spike. Now the number actually came out at 264. And this unemployment claims, as it continues to move higher and it continues to go to the upside, most likely we are going to see that eventually reflected and to see the increase in unemployment data, which the Fed, I think, is predicting to be around 4%, 4.2, 4.3% by the end of the year, and at this point is at 3.4, if I'm not mistaken. So that's a little bit of the macro data that you can look in the US and what you are looking for in terms of the data point that is coming. It has been released during this last couple of weeks or so. This week is a little bit softer in terms of any big data points, especially in the US. We may have these retail sales tomorrow, and aside from that, nothing much. So usually when you do have, or when we don't have much data, sometimes the market is a little bit ranging, so not really creating much momentum. So let's see if that's going to be the type of behavior that we're going to have this week or not. Looking across different countries, we're going to have a few labor data coming out in the UK, which is going to be tomorrow, with the claimant count changed, and also in Australia next Thursday, with another employment changed in here. In Australia, which was interesting because they decided to stop with any hikes the previous meeting, but last meeting actually they hiked again, surprising the market with that extra hike that I had at this point in Australia. The RBA is at 3.85%. Then we also have a few CPI numbers coming out. We have in the Eurozone, I think it's tomorrow, or it's going to be Wednesday. Yeah, Wednesday, final CPI. We have tomorrow in Canada, and then on Friday it's going to be in Japan as well. So again, it's not exactly secondary data, but it's not related really to the US, and usually they can be a little bit less impacted into the market. The biggest elephant in the room at this point is the US debt ceiling, right? Which basically with a deadline on the 1st of June, that they may enter in default if nothing is if a new plan is not arranged by then. So we have both parties trying to find a solution, going on in different meetings to try to find that solution to fix and to divide and to expand the data, the final point, and to increase the US debt saving. Otherwise, they went into default, and that could be really bad news for the market and to the US economy, of course. And that's why we have seen kind of this risk-off behavior in the market. The market is a bit concerned. You can look at the way the indices have been moving in the recent weeks. Really strong moves to the downside. At the same time, it's not really creating the momentum down. Prices being able to recover in the evening. There's a little bit of a range. We have also VIX kind of spiking a little bit between maybe 16 and 18 in there. Let's do it this one. So I've been starting to see a little bit of some moves to the upside as well in here on the VIX, which is still at this point at around 17. And we have the spike above 20, and maybe we're going to have more behaviors like that in the near future if a solution is not found for the debt saving that is going on in the market. So if you take a look into the charts and try to see what has been going on and how the market has been behaving. Yeah, since we last spoke, basically we have the dollar, which has been kind of in this range in here, close to the lows, and it's finally gaining momentum. Basically, the last 2 days, the last 2-3 trading days, we finally saw the US dollar gaining momentum to the upside, and this may be maybe the beginning of a new cycle, or at least price can most likely go higher and maybe retest the highs of the year, which was they were printed all the way back in the beginning of March. Right, so that's maybe a zone to pay attention to if the market actually wants to go all the way there with the dollar going higher. Maybe we're going to see all the rest going down, maybe gold also maybe moving a little bit to the downside, even though the correlations nowadays they have been a little bit changed comparing with what we had last year and maybe in the beginning of this year as well. But first point, we don't really need to aim all the way through those highs. We can actually maybe first look somewhere in here in the middle. It's around the 50% retracement in there. It's going to be also at the end of this compression zone. So that's maybe the first zone to look for on the dollar, to aim to that level. And then let's see if by any chance we're going to continue to move higher, or we're going to have a little bit of a correction and eventually move a little bit lower. But finally, we had a little bit of momentum. Dollar has been a little bit in a range for quite a while. And we could see, right? We could see last Friday, Thursday and last Friday in particular, the momentum that we had on the dollar, which had helped the dollar, the Aussie, the CAD to go higher, the euro dollar to go down, pound dollar to go down, Aussie dollar to go down, and so on. All right, so that's a little bit of what we can see on the dollar. We may have a momentum in here to the upside, which again can be a little bit of the behavior of the risk-off behavior in the market with the concerns of the debt ceiling. Then we take a look at the indices and S&P, Nasdaq, Dow, and DAX. All right, so here we are. This is the S&P. This is how price has been behaving for the last couple of weeks or so, for the last full month. So we are stuck in this range in here. Now there's maybe some behaviors of some information of a potential bearish move when price starts to break some lows that may start opening a bit size for price to go a little bit further down. But on the other side, the buyers may not be over yet, and maybe they still manage to keep push pricing a little bit more to the upside. Looking at the bigger picture, we have been looking for this kind of zone in here for a while, and that's the potential zone still on the S&P that price may go to, but we may actually have a move to the downside from this high. That may be a chance for price to move a little bit higher and then move down. Personal opinion, this break of a low kind of opens a little bit the room to the downside, and it starts to show some bearish signs in this move. It's a lot weaker than it start to show a little bit of a weak momentum in here. So comparing with what we had before on this rally, this can show a little bit of a zone of reversal. Let's see exactly what the S&P is going to do for the next couple for this week. If you're going to have this movement occurring or not. Of by any chance, we are going to break above this level and maybe follow what Nasdaq has actually been doing, because Nasdaq is already reacting from here. So in that sense, S&P is a little bit lagging comparing with Nasdaq, as you can see in here. So comparing both of them, Nasdaq is already trading closer to the highs back in August last year, while S&P is still trading underneath this high. So in terms of correlation and maybe space and which one is leading or lagging, maybe Nasdaq is leading at this point in terms of the levels that is reacting from. So let's see if this high is actually managing to hold price and hold Nasdaq to the downside or not. A behavior that we have seen recently during maybe these last couple of weeks is basically there's been a move down around the London and the beginning of US session with a recovery then at the end of the session. We have been seeing a little bit of that behavior. Let's see if that's going to remain for this week as well. Nevertheless, we start having a lot of compression in here as well, breaking a little bit of some lows on the way. So let's see, eventually you can have some kind of correction in here and maybe even push price back to around 12,500 or 700, something like that. Let's see if that's going to happen and what kind of week we are going to have this week. So this is the Nasdaq as well. There's maybe more room to sell again close to these highs, or even a little bit higher, a little bit closer to something in here. So that's something to keep an eye on in here on Nasdaq. And then you have Dow. There we go. A little bit negative as well, kind of a little bit weaker. So as you can see, Nasdaq is basically the strongest of the indices at this point, and that's a lot due to the big tech companies. They have been managing to push or kind of they've been performing quite well recently. That has helped as well the Nasdaq to be the strongest of the indices. Dow Jones. We may still, this may look like also a little bit of a behavior of a potential turn. Now this will react from a good level. If you do break below this wall, I think we can open literally the door to go further down in here, and yep, that can happen. We may actually start moving more to the downside. It was a really nice move all the way from here. So, and there's maybe another opportunity to sell if by any chance we go above this highs. I think there's a potential sell opportunity closer to this and closer to this level. Yeah, if you are bullish by any chance, yeah, if you want to go long around this level of support that price is creating, maybe can try to aim to those for that kind of move in there. And then we have DAX, which is a little bit of a euro in this looking in here. So, and again, another index that is ranging quite a lot, another one that is managing to break slightly a few lows. What are we waiting for maybe a big catalyst either to the downside or to the upside? Let's see what's going to be the biggest catalyst that happen. But at this point, you can see how volatile the market is, with a really strong momentum to the downside, good recoveries then to the upside, but the momentum or kind of there's a lot of volatility. That's basically in the moment where we are at this point in the market. So if you're looking for longs, for shorts, as traders, I think there's a lot of opportunities for us to take advantage of this kind of moves. Regardless if you are bullish or bearish, I think both spectrums, they can benefit from this kind of behavior that we have. And this is exactly kind of what we like to see, right? Volatility. That's how we can try to take advantage in the market. Is there anything else in here that maybe can push price down? Maybe. Let's see what kind of behavior we are going to have in here. just cautious in here on the DAX is that we are getting really close to this all-time double top in there, and maybe that can attract price towards that level a little bit. So let's see what's going to happen on the DAX in here this week. Looking at the other indices that we usually look for, right? Starting with the Euro index. Here we are, right? So interesting behavior in these last couple of weeks, right? So it started, for example, if you look at the beginning of May, we started with a great opportunity to sell the yen pairs because we could see that the yen index was getting quite strong from this level. We managed to identify that. So when you see this yen being strong, it means that most likely we are going to see Japanese yen, Euro yen, Aussie yen, Pound yen, all of them actually going down. And that was the first opportunity of the month. So yeah, beginning of the month, sell all those yen pairs. Then we had around the ECB press conference. It has been quite often that we see around that time the euro tends to move to the downside around the ECB's meeting. Maybe just the previous one, we actually had a little bit euro moving upwards. But if you take a look into how many times actually during this last year, euro moved to the downside on the same day that we had ECB, or maybe even during the ECB day, that's actually maybe the top for the next couple of weeks. It has happened quite often. You can go back and check exactly those periods and cycles, and that's exactly what happened. So ECB on the 5th of May, or on the 4th of May, we had ECB meeting, and there you go. We had euro moving to the downside, and it has been like that since then. It has been now 10 days since that day, and 11 days. And that was really expected. So again, around that time, looking for opportunities to sell all the euro pairs. That was one scenario, and maybe the cycle hasn't finished yet. Maybe we're going to continue to see a little bit more euro weakness, even though we are actually at a good point, an important level, to be honest, which is retest of this previous level support resistance within this level as well. So maybe in here we can have a little bit of a retracement. Otherwise, we may just continue actually to move down, and then we get closer to this level. So that's something to pay attention to. For the euro pairs, there's maybe more room to the downside, maybe after we have a little bit of a retracement in here. And last week, so we had beginning of the month selling the yen pairs, then on the 4th of May to sell the euro pairs, and last week it was basically to sell the pound, right? Especially with the BOE meeting that we had on Thursday. That was one that was screaming at us. It was a possibility to see literally the weakness on the pound that we have seen for these last couple of days, and that was proved. Just I will show you in a bit. And then there you go. Last Friday, it was finally the dollar move going to the upside, which is kind of just reinforced the movement to the downside on the euro, on the pound, on the Aussie, and the move to the upside on the yen, and so on. So this is just to see how important it is to look at these correlations and to try to see which currency pair is actually leading comparing with the other ones, and we should position ourselves in accordance with that, because it helps us to find the best trading opportunities. Because what you want is exactly that: find which currency pair is actually moving the most, that has the best potential possibility to move, and we try to capitalize on that move, right? There you go. That's basically what we are trying to do on a daily basis with all of you guys. There you go. Euro index, maybe can have a little bit of a correction in here. Let's see how price behaves around this level. So this level in here can be quite important. We may have a little bit of a correction towards that level, and then we may continue to move down. This level is becoming quite strong in terms of a support zone. It has respected quite 1, 2, even this week as well. So yeah, if we do break above this high, we may open a little bit space to go a little bit higher. Otherwise, if you continue to respect this level, you may just continue this bearish momentum that we have at this point. And then just this yen in here, right? Bigger picture, I think there's maybe a little bit more room to the downside on the yen. Price kind of this level broke that level. I think there's a little bit more room towards this level, or even my favorite, it will be even to go all the way, even closer to these lows. And this is actually a natural zone to look for that continuation of a move, right? Because this level broke out this level of structure, all these lows in here. Price now retested all the way there. It created a double top in there, and maybe you can start or resume this continuation to the downside, right? It looks like a natural move of a trend. We are creating new lower lows and lower highs and continue to go like that, right? Now, if we had broken this high, that would be maybe a different story. If we had managed to break this level, we didn't really do that. We actually created a double top in here. Now, my favorite would be actually to have taken that double top, respecting this level, and then move down. That didn't really happen in that moment, and most likely we can resume maybe the move to the downside. There's a little bit of a demand in here, but I think these lows already broke that one. 1 second, yeah, this low already kind of broke this previous one, so I think we actually can continue to move down from here. So just cautious with any longs that you are trying to look for here, which could be the reverse, right? If you are looking for one in here, don't worry, and it will be as a short. So yeah, maybe the end pairs are ready to continue to go down in here, which means the other ones upwards. So yeah, looking at the individual currency pairs that we have. So here we are with the euro, right? So again, ECB, that's when it happened. Price moved to the downside, and we finally feel all this compression. We are reacting from this first low, one of the demand zones that was still fresh, and there's maybe even more room to the downside for price to get maybe closer to here. That's maybe a little bit of what you can see, but for now, this level is still fresh. This demand zone, we can even aim to go a little bit higher, maybe retest this previous level in here, and maybe resume the move to downside after that. So let's see now what's going to happen on the euro. I could still see more move to downside. Eventually can even go all the way back to these lows, but you can have a little bit of a retracement, can have a little bit of a range like this before maybe gaining momentum to go down. So yes, let's see what's going to happen in here on the euro dollar. But for now, really nice move down. This was something that we should have expected since the ECB. Then we have pound dollar, right? Pound dollar was another one. As I mentioned last week, it was the opportunity. It was literally to go short on the pound around the BOE interest rates. And we had all that move, right? Because all this was compressed already, all that move to downside, it was expected to be filled. And that was the biggest trading opportunity, at least that I considered last week. And price now retested this level. I believe there's maybe a little bit more room to the downside. But let's see, now that price reached this level in here, that's already one of the targets that we're looking for this sell. So maybe can be a little bit even more of a retracement to the upside. Let's see how price behaves in here, and if price resumes eventually the move to downside. If you start breaking these lows, bigger picture, I think my favorite level, it will be for price to get closer to this 1.23251, somewhere in there. I think price could eventually go to. This level in here, basically where price is reacting right now, it used to be a strong level of resistance. So it's normal to see a little bit of a bounce somewhere in there, but eventually I think we can feel all this compression and get closer to this level in here. So that's something to look at. On the other picture, just to actually, and to see how important it is to do this higher time frame analysis, is that we actually broke this level in here on the left side, right? So that actually can maybe be in the future or in the immediate term can actually be an move to the upside, and price actually can maybe go a little bit higher. But before that, we may have that deep retracement before maybe the pound continues to gain some momentum, because maybe the next level can actually be somewhere in there. Yeah, maybe that can be actually the case. And this is just to see how sometimes when you do break these higher time frame highs, there's maybe actually the opportunity to initially look for a short as a reversal, and then eventually in the future we may look for that long that may resume this bullish momentum that we have on the pound for since the end of September in here, right? It's a big turnaround with the gilts and whatnot that push price to the upside, and maybe that bullish momentum hasn't finished yet, but for now retracement to the downside. It's a little bit expected. Let's see from where, and maybe where it's going to be that next zone to look for a move upwards on the pound. All right. On the same token, if it was a good sell opportunity on the pound dollar, it was maybe a good one in here on euro pound. Euro pound, actually looking at the bigger picture, we actually managed to break also all this level in here, which was a great short. Again, when we had that euro move to the downside, it was a great time to look for that short at the end of April and beginning of May as well. There you go with the BOE, with the ECB. Right, so it's important to be aware of that, right? Because this was the moment to look for a sell on the euro, and now it was a little bit of the movement to look for a long on euro pound, expecting the pound dollar to go down because it was a pound move. However, bigger picture, we actually may still have more room to the downside on the euro pound, maybe close to that level 0.86 216 or something like that, right? So there's maybe a little bit more room to the downside in here on the euro pound. Aussie dollar, it's another one that you like to look for, and it has been quite ranging, right? Basically, the Aussie has been a little bit of the weakest currency against the dollar, while, for example, euro, pound, and so on has been creating such a good momentum. Aussie has been just in this range, and that's basically where we are, not moving whatsoever for almost the last 3 months. Right, since the end of February all the way until now where we are, price hasn't really created any momentum either to the upside or to the downside, respecting all the structures in here between the highs and lows, or anytime you kind of have a little bit of a break of a high, that's straight away a big correction to the downside. So let's see, eventually you are going to break towards one side or the other. Bigger picture, I'm actually expecting eventually for price to move down, but when it's going to happen, not really sure. So let's see. If you do like to trade ranging markets, Aussie dollar has been the market for you in that sense. That's kind of what we are in here. Then we have also Euro Aussie that's been moving quite nicely as well. I'm not going to pay attention to it right now. And then we have the yen pairs, right? There we go. The move to the upside, similar to the yen index that has respected that supply. This yen, this dollar yen has respected this demand zone, right? It's managed to hold it and hold it again, and you may go all the way now close to this highs in here. That's maybe where we are headed on this dollar yen, and maybe can even eventually take the highs if the yen index actually is going to take the lows. That's going to be some GDP and CPI data coming out in Japan during this week, so that may affect the market. We may have actually a little bit of a correction in here. Let's see how price reacts from there, but it's just intraday level. Maybe the final target for this move to the upside is actually somewhere in there. And since we never managed to break these lows, if price starts approaching this high, I'm actually going to expecting for price to break the highs, since we never managed to break this level. If we had broken that level somewhere in here, maybe we can eventually cook there all the way down. But at this point, as long as these lows keep being respected, I think eventually, if price does indeed react from there or approach this level, I think you're going to have new highs in here. But let's see what's going to happen. This is just some scenarios that you are playing out depending on what price does. Yep, this is the euro, this is dollar yen. We have also the euro yen moving also to the upside, but euro yen, there you go, it's a different story because we actually managed to break this level. And this is just to see a little bit of how the euro has been a little bit more weaker in here, or stronger in this case, and not weaker. So there you go. In this case, we actually managed to break this structure, so that actually may open the door to our price to go a little bit more to the downside. Which can be interesting to see what may happen in here. So yes, euro yen has been one of the strongest overall in the bigger picture. We managed to break even all these highs, retesting these levels all the way back from 2008, and we retested this level. This is a weekly and monthly previous level of support that, as you know, a previous level of support can really well work as resistance, and that's basically what happened in here. And breaking these lows, this can actually open space to go further down. So let's see if that's going to happen. Meanwhile, actually going upwards, I'm looking for price to get a little bit closer to that level, if not even then higher than that, if you manage to break this high. But eventually, I'm going to be looking for a potential sell on the euro yen. There's maybe that potential to look for further move down, which again can be caused with the euro index and the euro pairs moving to the downside as well. So interesting, a little bit of a mix data point in here between the euro yen and the dollar yen. Pound yen as well, moving a little bit to the upside after that move down with the Bank of England, but now it has been quite strong in kind of relation to the strong move or the weak move on the yen. Let's see how price is going to react from there. We actually managed to break slightly that high in here, so maybe we can even resume the move to the upside in the bigger picture. Right, we just broke that high. We are somewhere in there. Maybe this can be a continuation. I would actually prefer to see price going a little bit further down before going higher. But let's see what's going to happen on the pound yen. There's maybe some good level still here close to the highs that maybe can still see from a move down. Yeah, then you have CAD. CAD has been an interesting one. Another one that is in a big range, however, much bigger than comparing with the Aussie dollar. CAD has been actually quite wider, in a wider range in here. But again, we are in this level. Anytime price approaches these lows, it reverses and goes higher, and kind of anytime it gets close to some highs, it just retraces and reverses to the downside. And we have been in here all the way since September, October. Yeah, so basically we created these highs in October, we created these lows back in November, and we haven't managed to break neither the highs or the lows since then. And there you go. Let's see if price is going to approach again a little bit more the highs. Are we even going to manage to break these highs, getting a little bit closer to this level or not? Yeah, that's something to keep an eye on the CAD in here. Then you have dollar franc Swiss, which has been kind of moving a little bit to the upside. It's been in a range as well, but quite different, right? Because actually managing to break lows. We are approaching, and we just reacted now from these lows back in 2021, the beginning of 2021. These lows basically were the last lows that created all these highs from last year. Yep. So we may be close to a potential reversal in here, or at least some retracement. We are a little bit in this range. Last week we had a little bit of a move to the upside with the help of the dollar index that moved higher. I'm going to be still being bullish. If price by any chance gets closer to these lows, I'm going to be bullish. We kind of still need a little bit of a break of a high to confirm or to give even more confirmation that eventually the dollar this dollar franc Swiss wants to go higher. I'm going to be paying attention also somewhere in there to look for a potential reaction to the downside. So let's see. We are within this range as well, and I think a little bit of this indecision is also due to this indecision that we have seen on the dollar index. If the dollar by any chance starts to gain momentum again, most likely are going to see these dollar rated pairs to gain momentum as well. And then we have gold, right? Gold was an interesting one. Since last time we spoke, we had this big spike in here on the day or during the night of the FOMC meeting. Depending on the service that you're looking for, it may have actually broken all-time highs or not. So question mark is, did it broke above that level or not? Depending on which survey you're looking for, it may have happened. And here we are, right? So we tested those all-time highs at around 2070s. Are we going to start moving to the downside from here, or by any chance we're going to have another big momentum to the upside? Maybe if this debt saving situation continues to be an issue, we may see gold going and continue to move to the upside, or if there's any other situation, for example, the banking system, banking industry in the US or something like that, we may have another momentum to the upside on gold. over time frame, I am actually looking for eventually for gold to go a little bit lower, close to these lows, or even then a little bit closer to this level, and from there maybe can have another continuation to the upside. So at this point, I'm looking for gold to get a little bit closer to this mark in here. It's kind of using this 2000 mark as a zone of support. As you can see, it attempted to go there once, it attempted to go there again last week, and it's kind of reversing straight away. So this 2000 mark has been working kind of as a support, and eventually can work as a resistance as well, right? These round numbers usually they can be quite interesting. So let's see what's going to happen in here on gold. Again, another asset that has been providing a lot of volatility in the market, strong moves either up or down. Then you have the oil markets, another one that we look for, like another big spike that happened around the same during the same moment that the gold spiked to the upside. It was during the night of the last FOMC meeting. We managed to break slightly new lows for the year. However, we haven't really broken the important level of structure that you are looking for in here on the left side. Let's see what's going to happen in here. We found this level of structure. There's maybe a little bit of a move down before maybe continue to go higher. And let's see if this oil market is going to be within this structure as well or not within this range. Right, a few interesting situations. Maybe expecting the demand side from China. The US, I think, is going to refuel kind of a reservoir. Something like that in the US, so they may be buying more oil as well. So the demand side can start to increase a little bit. So paying attention in here as well. And then of course maybe some conflicts that goes on that can affect a little bit the supply side. So yeah, interesting moment. A lot of volatility as well in the oil markets at this point. And of course fears of recession can also be a concern in the oil price. And to finalize, we go take a look into the crypto space, starting with the Bitcoin, which has been in a strong, also volatile momentum. We had that peak all the way in the middle of April. We went all the way above 30,000, and we actually touched 31,000. It was retesting these levels in here from last summer. It was an important level of resistance and a specific level of supply in there. All this compression, it was a little bit expected that price would eventually complete all that move, and now it's reacting from a good level, a first initial level in here. If you actually look into the war time frame, it was a nice level where it reacted from. However, there's maybe still the possibility of actually retesting this 25 mark. Right, this is an important previous level of resistance. We actually have this beautiful demand in here as well, and there's maybe the chance of eventually going back there before maybe resuming all the move upwards. We'll see what may happen. We had this big sell-off Friday evening. There's been quite a pattern to see a strong move Friday night in the crypto space, and then kind of a continuation, then start a new movement then during the weekend. There you go. We have a little bit of a correction in here, kind of a retracement to the upside after this big sell-off that occurred. Are you going to find some resistance around this level and price kind of resuming the move to the downside? Maybe that can happen. Again, I'm still going to be looking at around this level as a potential zone for price to go towards to, and maybe from here we can go higher. And there's maybe a few levels in here that price can use to push price down. All right, around this maybe 27, 28 mark. We'll see. Just keep an eye on how price is behaving. Maybe we can find those opportunities in there. And Ethereum moving quite in a similar way. Yeah, if you guys remember, initially price reacted from this demand zone. Bigger picture, we actually managed to break these highs in here, but you are still kind of reacting from this extreme previous level of support as well that kind of work as resistance. And this was kind of the beginning of that move upwards, retesting of this with a previous level of support as well, of resistance that kind of work as support. Yeah, in terms of the demand zones that were still in here, we initially saw this one where price reacted, but this was actually the other one that we were actually looking for. None of these was reacted from there. So this is actually kind of one of the last demands in here. Aside from that, basically almost everything has been taken, and price eventually could go even further down. If you do break below this low, you even can aim to go towards maybe 1,500, something like that. But for now, this was fresh, and this is basically where price now reacted from. So Ethereum reacted from a good level. Maybe from here, it can go and start going higher. We have maybe a little bit of this level. Prices already reacted from this structure. That's nice to see. So that price could go a little bit higher. If by any chance we do have this kind of behavior now, price goes a little bit higher, pauses a little bit, breaks above this level one more time, retraces all the way back there, and maybe from here we can have that bigger move upwards, taking these lows in here, doing something like this. Could be a great opportunity. This one will confirm that you want to go higher, go all the way down, take the lows, react from this demand zone, and then spike all the way up in there. That's just a small trading opportunity in a bigger picture of maybe what you have in here, or even before. If you go here before even this, maybe this is all your target, and you don't really need to aim higher than that. Price from there can then resume the move down. So let's see which level price actually touches first. Is this one or is this one? And you can be trading in between those two levels in there. So just an idea in here on Ethereum. So yes, many people may start to be bearish because we finally maybe broke a little bit of these lows. It's actually maybe a little bit of the opposite. Maybe now it's actually, and it started already with last Friday, the timing actually to see a little bit of a correction in here. And if you do want to look for another sell opportunity, maybe wait for price to get a little bit closer to the highs or not, right? Don't follow what just price is doing, in the sense that, or if you do that, most likely you are entering too late to the party. It's not just by breaking these lows now that you're going to start looking for sales. You do need to start looking for sales when price is starting to create this kind of behavior in here at the highs, and you maybe can start looking for longs when price is starting to now slow down in here, starting breaking some highs on the way, and eventually kind of correcting like that. This is maybe the moment to look for those longs. It's not again when price eventually breaks in here that you're going to look for longs. It's already, you are missing out maybe on the 6K mark from 25 to 31, something like that, right? Same way that you already maybe missed out on the sell opportunity during all these opportunities in here, because maybe you're still bullish in here, and you cannot visualize it actually that price is actually wanted to go down in that moment. So yeah, just try to improve that timing and don't follow just the masses in terms of, otherwise you're going to just be too late to the moves and to the opportunities. And when you're about to get short, it's actually when price is about to go up, and when you're about to go long, it's maybe when price is about to go down. And there you go, you get trapped in that cycle. With that being said, guys, that's basically it for us. Thank you so much for attending another one weekly market analysis. We are going to be back next Monday. I wish everyone an amazing week of trading. Follow your plan, trade your plan. Have a good one. Bye bye.